Welcome back, everyone. Today's video is going to be something that truly matters, not just for investors, but for anyone who wants to understand how major geopolitical events can shake the very foundations of the global economy. First things first, market volatility. The stock market reacts fast to political upheaval, and a major military strike like this one is no exception. In the wake of these strikes, the initial reaction is what we call a flight to safety. What exactly does that mean? Well, when markets are spooked, investors often look to pull their money from risky assets, things like stocks, and move it into safer havens like bonds and gold. On February 28, 2026, a massive military strike took place. The United States and Israel launched coordinated attacks on Iran, targeting strategic military sites, leadership compounds, and key infrastructure across the country. But what does this mean for you? Whether you're a stock market enthusiast, crypto investor, or just someone concerned about the price of gas at the pump, this event is set to have far-reaching consequences. In this video, we're going to break down the immediate and long-term impacts of these strikes on everything from stocks to crypto to commodity markets. Let's kick things off by answering a simple question. How will this geopolitical shakeup hit your wallet? Section 1. Immediate impact, market volatility. So, expect the stock market to face increased volatility, especially in sectors like energy, defense, and even Middle Eastern companies that could be directly impacted by the situation. Energy stocks, for example, might surge, particularly companies involved in oil and natural gas, as fears of supply disruptions from Iran, one of the world's largest oil producers, take hold. But not all sectors will benefit from this. Technology and consumer goods stocks could take a hit as investors fear potential economic slowdowns. And then there's the defense sector. Companies like Lockheed Martin, Boeing, and Northrop Grumman often see stock price boosts when tensions rise globally as governments ramp up military spending. But there's another side to this coin. Emerging markets, especially those dependent on oil exports, may face turbulence as investors pull out due to regional instability. Expect some market downturns in countries that rely heavily on oil exports. Section 2. The cryptocurrency market's reaction. Now, let's talk about the crypto market. Cryptocurrencies have often been seen as a digital safe haven in times of uncertainty, and events like the U.S. Israeli strikes on Iran could put this to the test. With the volatility in traditional markets, we could see investors flock to Bitcoin and other cryptos as a hedge. In fact, some might view Bitcoin as the digital gold it was intended to be. But here's the thing, crypto isn't always as safe as people think. Crypto markets are known for their high volatility, so while there might be an initial spike in demand, we could also see a massive correction if panic sets in. What does that mean? Well, you might see Bitcoin hit a new high, only to see it plunge just as quickly as investors move their money around looking for stability. Now, a more immediate reaction could be a move into stablecoins. Cryptos like Tether and USD Coin that are pegged to the US dollar. Investors could move their assets to avoid extreme price fluctuations while the situation stabilizes. Section 3. Commodities and energy prices. Moving on to commodities, the lifeblood of the global economy. When a country like Iran, with its critical role in the oil market, gets involved in military conflict, the ripple effects can be huge. As you might expect, oil prices will spike. Iran plays a huge role in global oil production, and if their supply chains are disrupted, global prices for oil can soar. Gasoline, heating oil, and even manufacturing costs will see a significant increase, driving up prices worldwide. This increase in energy prices could push inflation higher globally, especially in developing economies that are already struggling with high fuel costs. Precious metals like gold, which investors flock to when global markets are in turmoil, will likely rise in value as well. If you're holding gold in your portfolio, you could see some major gains in the short term as the market reacts to uncertainty. Section 4. Long-term economic impact. But what about the long-term effects of this strike? Well, if this conflict escalates, we're likely to see a global slowdown in trade. When military conflicts break out, trade routes become unstable. This impacts everything from raw materials to finished goods, not just from the Middle East, but globally. Countries that depend on oil imports or that are involved in energy-intensive industries will feel the squeeze as costs rise and supply chains break down. Section 5. How to prepare for this economic turmoil. So, how should you prepare for all of this? First, diversify your portfolio. If you haven't already, think about including precious metals or energy stocks, especially in oil and natural gas. These are assets that tend to perform well when there's uncertainty in the world. Secondly, stay informed. The situation in Iran could change at any moment, and that means you need to stay updated on the latest news so that you can make informed decisions. And third, consider your risk tolerance. If you're an investor who can't stomach volatile markets, you may want to consider moving assets into safer investments like government bonds or cash equivalents, especially as the situation continues to unfold. All right, that's it for today's breakdown of the U.S. Israeli strikes on Iran and their potential impacts on the global economy. I hope this gives you the insights you need to make smarter financial decisions in these uncertain times. If you found this video helpful, make sure to like, comment, and subscribe for more content like this. Stay safe, stay informed, and I'll see you in the next one.